Hello, this is Rich Dad. Tomorrow is the FTX repayment hearing. We will be covering topics related to FTX compensation repayments and how the crypto industry has been significantly suppressed due to the resignation of the SEC's head of enforcement and the potential impact on the crypto market, and the statement from a major financial institution led by someone Warren Buffett respects. Lastly, we will discuss market trends based on on-chain data. Let's get started now. Next Monday, a federal court hearing is scheduled regarding the repayment of FTX creditors. If the court grants approval, repayments will be prioritized for claimants with amounts under $50,000, with payments expected to be completed by the end of 2024. Investors with amounts exceeding $50,000 will have to wait until the first or second quarter of next year, since a significant portion of investors have less than $50,000 in claims. If repayments for those under $50,000 are prioritized, it could lead to buying pressure in the market. To summarize, the exact compensation plan will be confirmed after the hearing on October 7th, 1 week from now. Small creditors, those with claims under $50,000, will receive repayments by the end of this year. Larger creditors with claims exceeding $50,000 may have to wait until around the first quarter of 2025 for repayments. Although the repayment method for creditors has not yet been decided, discussions are ongoing regarding the option to choose between cash or cryptocurrency. However, with $11.4 billion in cash already secured, and the expectation that it will increase to $12.6 billion by the end of this month, it seems more likely that cash repayments will be prioritized over cryptocurrency. Interestingly, some creditors prefer to receive their repayment in cryptocurrency. This is because the price of Bitcoin during FTX's bankruptcy was $16,900. Since Bitcoin's value has significantly risen, they prefer to receive their repayment based on the current higher value rather than the price at the time of the bankruptcy. I understand their mindset, but it's questionable whether they would have held onto their Bitcoin without selling if FTX hadn't gone bankrupt. Anyway, we'll find out tomorrow, so let's wait and see. Given that the total repayment amount is around $15 billion, it's understandable that completing it without any errors in a short period is unlikely. It has already been confirmed that approximately $230 million will be distributed first to FTX preferred shareholders, followed by sequential repayments. What's certain is that while it may take some time, as repayments will be distributed in the middle of each month, the key point is that there is a very high likelihood that this liquidity will flow directly into the crypto market. There have been changes within the SEC, which has been suppressing the US cryptocurrency market for some time. Gerber Gruel, the SEC's head of enforcement and known as Gary Gensler's enforcer, has resigned. Gruel's role was to oversee investigations and enforcement actions related to securities law violations. According to reports, during Gruel's tenure, the SEC approved over 2,400 enforcement actions. All of these actions were overseen by Gruel, with more than 100 of those actions targeting the cryptocurrency sector. Notably, these cases included the operators of the world's largest cryptocurrency exchange. For those quick to catch on, yes, that's correct. The person who sent Binance's Changpeng Zhao packing and shook up Coinbase is none other than Gerber Gruel. Gruel's recent key actions in regulating the cryptocurrency industry include his involvement with Binance and Coinbase, as mentioned earlier, as well as the regulation of Ripple and stablecoins, which many Korean investors hold. Looking back at the regulation of Ripple in 2020, the SEC filed a lawsuit against Ripple for violating securities laws. After the SEC's lawsuit announcement, Ripple's price plummeted, and many exchanges either temporarily suspended Ripple trading or decided to delist it. As a result, investors felt uneasy due to the legal uncertainty surrounding Ripple. As a result of this case, cryptocurrency projects became much more cautious about operating within the US. Consequently, regulatory risks led to a decrease in investor inflow. The same goes for Binance and Coinbase. In 2023, the SEC implemented regulations related to the illegal sale of securities. This was in response to US-based exchanges avoiding SEC registration requirements or offering coins that could be considered securities. As a result, investors started to feel legal risks when trading on Coinbase or Binance. These regulatory actions led to a decrease in trading volume and a reduction in market liquidity. With Gerber Gruel's resignation as SEC enforcement director, his deputy, Sanjay Wadhwa, will be taking over as the new head. Wadhwa is a veteran who has worked at the SEC for over 20 years, holding various roles as the deputy in the enforcement division. Given his experience, he may not face significant challenges in carrying out his duties, but with media reports suggesting that Gruel's resignation was a proxy removal on behalf of Gary Gensler, Wadhwa may feel the need to tread cautiously to some extent. The evidence supporting my argument is contained in this article. The article mentions that Gruel's departure has sparked speculation that the SEC may soften its stance on cryptocurrency as the November U.S. presidential election approaches. Kamala Harris has stated that the U.S. should lead the cryptocurrency industry, while Trump has promised to fire Gary Gensler. In the September House Financial Services Committee hearing, Gensler faced criticism from lawmakers regarding his approach to cryptocurrency regulation. Based on these developments, I believe there is a growing possibility that regulations could be eased moving forward. If regulations are eased, more institutions will likely enter the crypto market. Recently, there have been signs that a major U.S. financial institution, almost on par with BlackRock, is preparing to enter the crypto market. The founder of this institution is known as the Oracle of Omaha, one of the world's top 3 investors, Warren Buffett. He has been praised by Warren Buffett, who said, "I have respected him for a long time." As someone admired by investors worldwide and praised by Buffett, the head of the financial institution that stands on par with BlackRock is none other than Jamie Dimon of JP Morgan Chase. In the early 1970s, when stock investing was primarily reserved for Wall Street and the wealthy, he established a discount brokerage firm that allowed ordinary people to invest more affordably and easily. He developed and offered services focused on individual investors. He introduced a 24-hour phone price quote service, a no-commission mutual fund supermarket, and online trading services in the early days of the World Wide Web. Initially treated as an outsider, this soon turned into the title of industry pioneer, and nearly 50 years later, 24 million customers worldwide now use his company for stock trading. He is none other than Charles Schwab, the founder of Charles Schwab Corporation, the largest online brokerage in the U.S. Charles Schwab's CEO officially mentioned that if cryptocurrency laws change and regulations permit, they could offer cryptocurrency trading services. Although the condition is that regulations must permit it. The mere entry of Charles Schwab into the market is expected to have a significant impact. To summarize once again, Charles Schwab is the largest brokerage firm in the U.S., known for offering a wide range of financial products and investment services. It was founded in 1971 by Charles R. Schwab, managing an astonishing amount of $800 billion, which is about $800 billion USD, putting it on par with BlackRock in terms of scale. However, Charles Schwab differs somewhat from BlackRock. To highlight the main distinction, BlackRock's primary focus is asset management. It manages assets for institutional investors, including pension funds and iShares ETFs, and is also well known for its risk management solutions. Yes, exactly. BlackRock primarily serves institutional clients and large investors. On the other hand, Charles Schwab primarily offers discount brokerage services, enabling individual investors to trade stocks, ETFs, and options. It also provides a variety of asset management services. In short, Schwab targets individual investors and small institutions, playing a significant role in promoting the culture of DIY investing. The key point to note here is that Charles Schwab is the company that had a major impact in bringing individual investors into the stock market. If Charles Schwab starts offering cryptocurrency trading services, even if just 2 to 3% of the $800 billion investment capital from 25 million individual investors worldwide enters the crypto market, it could inject over $150 to $225 billion of liquidity into the market. That's why I believe that if Charles Schwab opens cryptocurrency trading services, it will be a massive positive for the market. Therefore, if the current regulations on the U.S. crypto industry are eased, would Charles Schwab even be a concern? More and more financial institutions will likely try to enter the market. I believe the likelihood of Charles Schwab entering the crypto market is currently very high. Looking at a few factors, President Biden finds himself in a difficult position due to this week's missile incident. Citizens are questioning what the government did leading up to this crisis, and confusion is growing within communities. As a result, public sentiment is shifting towards Trump. In reality, crypto-related regulations have been gradually easing even before the presidential election. With BlackRock, which is said to influence every global company, opening the door to Bitcoin ETFs, the acceptance of Bitcoin by traditional financial institutions is clearly on the rise. In addition, an Ohio state senator has introduced a bill to allow taxes to be paid in cryptocurrency, including Bitcoin. Given these developments, I expect that crypto market regulations will continue to ease progressively. Naturally, this would further stimulate the market and have a positive effect on the prices of Bitcoin and other cryptocurrencies. It takes me at least 20 hours to produce a single video. If you find my content exciting and believe in the future of Bitcoin and the cryptocurrency market, please take just a few seconds to subscribe and like. I'll continue to work hard to create great content moving forward. This article reports that Spain's major bank, BBVA, and Visa are collaborating to issue an Ethereum-based stablecoin. This signifies that major financial institutions and global payment companies are adopting cryptocurrencies and digital assets, which could be a significant positive development for the cryptocurrency market as a whole. Additionally, since the stablecoin is being issued on the Ethereum network, it could significantly increase the usage of the Ethereum network. As a result, the activity on the Ethereum network would rise and network fees could increase. This could lead to higher demand for Ethereum, potentially driving up its price. Additionally, Vitalik Buterin, the developer of Ethereum, has stated that it's time to discuss lowering the minimum staking requirement from 32 ETH to 16 or 24 ETH to increase staking accessibility. To briefly explain staking, it involves depositing Ethereum and receiving interest in return. If the staking requirement is lowered, more investors will be able to participate in staking. And as the amount of staked Ethereum increases, the supply of Ethereum available in the market decreases, which could create upward pressure on Ethereum's price. In line with this, the inflow of funds into Ethereum spot ETFs, which had been sluggish, is starting to pick up again. Notably, net inflows have been observed from BlackRock and Franklin Templeton. It seems that Ethereum is starting to recover. While Bitcoin remains relatively stable, Ethereum has seen a net inflow for the first time in a while, possibly due to the continued stream of positive news. Out of the top 25 ETFs launched this year, 10 are Bitcoin ETFs. This indicates a significant increase in demand for Bitcoin investments. ETFs make it easier for traditional financial markets to access cryptocurrency, which is why many institutional and individual investors prefer ETFs as a means of investing in Bitcoin. In other words, this list reflects the strong demand and interest in Bitcoin among investors. This trend also suggests that Bitcoin is being integrated into the mainstream financial system. Although Bitcoin has not yet shown explosive price movement, more than 100 million transactions are processed weekly. The trading volume has grown over 200 times in the past 5 years. An increase in trading volume indicates heightened interest and activity from investors in the market, which suggests that the growth of the crypto market can continue moving forward. This chart represents the movements of whale investors holding between 100 and 1,000 Bitcoins, depicted as a line. If you look at the data points marked 1, 2, 3, and 4 on the chart, you'll notice that these whale investors tend to significantly increase their holdings during dips just before major price increases occur. Afterward, Bitcoin experienced upward movement at point 3, which coincides with the approval of the Bitcoin spot ETF. These investors increased their holdings, but when the price began to move sideways, they reduced their holdings, only to accumulate large amounts of Bitcoin again over the past 2 months. As seen in previous cases, this could indicate an expectation of an upcoming price increase. If we take a look at the key indicator for tracking US smart money, the Coinbase Premium Index, it has shifted from negative to positive and is generally maintaining a bullish trend. The chart you're looking at compares price fluctuations based on past halving cycles. After the halving, the significant price increase typically began in the third quarter following the event. Now, 2024 is exactly at that point. This means the full price surge hasn't started yet. Of course, this cycle might have a lesser impact from the halving compared to previous ones, but it's actually the first cycle where the halving coincides with ETF approval, the US presidential election, and potential rate cuts. That's why I have even greater expectations for this cycle. The final on-chain data I'd like to show you is an indicator that helps identify the peak or top of Bitcoin's market cycle. In the past, whenever Bitcoin reached its peak, this indicator touched the designated zone. However, this season, it hasn't even reached halfway. This suggests that there is still plenty of room for upward movement. October has just begun, and I believe that after the US election in November, once political uncertainty is cleared, the market will likely improve even more compared to this month. With only a few months left in the year, it's worth waiting with excitement. Here's the summary of today's video. Despite various controversies, the $15 billion in FTX compensation funds could gradually enter the market, potentially creating buying pressure. The resignation of SEC Enforcement Director Gerber Growal likely stemmed from industry backlash due to the SEC's strict regulatory approach to crypto. This suggests that crypto regulations might become more relaxed moving forward. The announcement from Charles Schwab, the largest online stock trading platform in the US, could act as a catalyst for drawing in numerous retail investors who have yet to enter the crypto market. Ethereum, which has underperformed recently, is seeing an increase in net inflows. Additionally, with major timing developments such as Spain's major banks and Visa issuing stablecoins, and Vitalik Buterin working to ease staking conditions, Ethereum could soon regain strength. While the current cycle may not have the same impact from the halving as in previous cycles, it's the first time the halving, ETF approval, interest rate cuts, and the US presidential election are all aligning. This leads me to expect a supercycle. Even Warren Buffett respects Charles Schwab, who offers this advice to investors. The way to make money in the stock market is by staying in the market for a long time, not by trying to time it every time. It seems to mean that you shouldn't be swayed by short-term price fluctuations, but instead take a long-term view to make money. The time is truly almost here. I hope everyone makes great profits in the upcoming bull market. If you found even one part of this video helpful, please consider subscribing and liking. Thank you.